Witnesses for appearing before the subcommittee today. We look forward to your testimony. And I now recognize myself for 5 minutes to give an opening statement. Many homeowners don't focus on appraisals until something goes wrong or until they can't get one. It's not an area in which Congress spends much time debating or one that the media covers intently. But appraisals are one of the cornerstones of the home buying process. Issues that impact appraisers also impact nearly every American buying or selling a home in rural and urban areas, in high and low-income neighborhoods. These issues affect lenders, home builders, real estate professionals, and ultimately the health of the American economy. And the manner in which appraisals are regulated merits the attention of this subcommittee. The appraisal profession has changed dramatically since the last major regulatory overhaul with passage of FIRREA in 1989. The finance mortgage system has changed and alternative valuation methods are more advanced than ever. Yet when it comes to the regulatory regime surrounding appraisals, it seems we're stuck in 1989. Let's do a quick overview of the system in place today as I understand it. The Appraisal Subcommittee, a body comprised of 7 federal regulators, regulates the standards and requirements of each state appraisal board. The Appraisal Foundation, a non-governmental entity chartered by Congress, promulgates those standards and requirements for the states, but lacks any meaningful regulatory authority. That authority lies in the states, which go through the actual process of credentialing and the appraisers based on the criteria set by the foundation. We've got licensed appraisers, certified appraisers, and certified general appraisers. We've got appraisal management companies that act as a third party in selecting appraisers. This is not a simple regime, and it impacts homeowners. Perhaps as a result of some of this regulatory bureaucracy, the appraisal industry is experiencing a shortage that's beginning to harm the housing market. We're seeing delayed closings and increase in consumer costs. This shortage is hitting rural areas particularly hard, including rural Missouri, which I'm very familiar with. Today's hearing will give us an opportunity to investigate the past, present, and most importantly, the future of appraisal regulation. Personally, I'd like to see a more state-centric model of regulation, one that cuts some of the federal bureaucracy hovering above appraisers today. Beyond the regulation of appraisers, we should look at the current regime, what the current regime requires of lenders, builders, and home buyers. We need to examine alternative home valuation methods that employ the most modern technologies and foster greater consumer choice. We should look at the individuals who should and should not be qualified to do an appraisal and deploy resources accordingly. In rural Missouri, for example, where today there may be 1 appraiser for every 2 counties, there needs to be an alternative. We need to address this in the changing marketplace. Dodd-Frank attempted to address some of the shortcomings seen in the appraisal market, but the law's impact has not enhanced the system for appraisers, stakeholders, or most importantly, consumers. Appraisals are important. They instill confidence and guard against housing markets that could otherwise become depressed. We live in the 21st century and the market deserves 21st century solutions. It's long past time to examine this model of regulation and find a better way. Again, I want to thank the witnesses for appearing before the committee today. Look forward to an open conversation. And the chair now recognizes the ranking member of the subcommittee, the gentleman from Missouri.